Welcome back, traders. First off, you will notice that my whole aspect ratio is very different to what you're used to. This is because a lot has been happening in the US dollar, and I want to be able to show you all the information I possibly can. So I've expanded my MetaTrader across two different monitors, just so that we can kind of move around and see everything at the same time, so you can see what's happening and how this can be an incredibly useful trading tool. On Thursday, the US dollar posted its biggest loss in 5 months, and investors have dialed down their expectations on the outlook for the US interest rate hike next year, based on the minutes from the Federal Reserve's latest policy meeting. So basically, the news coming out of the US dollar is not good. They're not very happy. This could be put down to Trump, it could be put down to world issues, it could be a whole mixture of things. But either way, the US dollar outlook is not looking very good. So let's have a look at, I've kept open the pairs that we've been trading. So we've got the Aussie Canadian, the Pound Canadian, the Euro Kiwi again. And then these last ones across here all have the US dollar in it. And I want to show you and how one news event or one outcome can drastically change so many different currency pairs, and how you can actually use it to trade opposite pairs. The first one we're looking at is the US dollar Japanese yen. Now you'll see from about this point, the market has just dropped suddenly. Our moving averages are giving us a crossover. Stochastics went into oversold, and it's staying in oversold, and it might be there for quite a while. And we can see pretty much where it happened. And it looks like this was the turning point, even though it had been coming down for a little bit before. This is a big place where it came down. So when we have the US dollar on the left, it means that $1 will give us this many yens, depending on what it is. So when the market comes down, it's telling us that either the dollar is weakening or the Japanese yen is strengthening. Now let's have a look at the euro dollar. We see that the charts have been shooting up. This is because the US dollar is on the right hand side. So now €1 will give you more US dollars. And this means that either the euro is strengthening or the US dollar is weakening. Because we can see it's happening in the dollar yen and the euro dollar, we're starting to think, well, maybe this is the dollar that's getting kicked. So the next pair we have a look at is the dollar Canadian. Now these ones are usually quite closely tied because there is a lot of business partnership between them. There's a lot of commerce. So their currencies, while not totally reliant on each other, we definitely do see some correlation between them. However, even in this case, we are seeing that the US dollar is taking a hammering against the Canadian at about the same time that it did on these other pairs. And then again, we have a look at the Aussie US dollar. The Australian dollar, at about the same time, has been thrashing the US dollar, which looks like it will actually be changing the whole direction of the trades that we're looking at. Even the South African rand has been strengthening against the dollar. And this could either be something bad happening in America or something good in South Africa. And the last pair that I've loaded up here, the DXA, this is the dollar index. What they do is that they take a basket, meaning a whole collection of the larger currencies, and they look at what are they worth against a single one, in this case the US dollar. And they give it like an overall strength. And we can see that the US dollar index is confirming what we're seeing, that the US dollar is taking a hammering. Now what this means for us is that we are likely to see a lot of turning points happening in the market. If the currency pair had been going one direction, but now the US dollar is getting kicked, then it could be shifting in another direction completely. Alternatively, if the US dollar getting kicked is going to confirm your existing trade, then you should be in for even more money than you were looking at before. Now, it won't affect any of the trades that we've placed on this demo account, purely because we're not trading the US dollar directly. However, there is some correlation between the British pound Canadian dollar. So we would want to have another look at this and just see what's happening. So now I've loaded up the charts in front of us, and we can see here that we were in a buy. We're still in the buy. We've moved the stop loss up to this point. And if you remember, we were quite nervous about a pin bar here. That's been pushing down, and now with the correlation between the US dollar and the Canadian dollar, you may want to close this trade. I don't think the correlation at the moment is that strong. Canada has been distancing itself quite a bit, and they are a very large economy in their own right, so they're not totally reliant on the US dollar, but still we may see it coming down. If this trade was not in so much profit at the stop loss, I would definitely close it. But purely because we've already made quite a bit of money off of this and the remaining amount is still a good amount of profit, I'll sit and I'll hold it out. For those of you who've done the online course, you'll know that we do talk about correlation quite a bit. This is one of those times where you should go back to those notes, go through it, and then load up your charts and see what it's really like in real time while this is happening now.